Global headlines are buzzing about the US Venezuela situation, but the real question is, does this actually matter for Indian stock markets? Let's break it down with facts, not noise. Venezuela holds the largest proven oil reserves in the world, over 300 billion barrels, nearly 17% of global reserves. The US has historically imposed sanctions on Venezuela's oil sector, limiting exports and supply. Any escalation or policy shift immediately impacts global crude oil sentiment. Oil is a globally priced commodity. Even the fear of supply disruption can move prices. To put it in perspective, the world consumes about 102 million barrels of oil per day. Even a 1 to 2 million barrel supply risk can create volatility in crude prices. That's why markets react first and ask questions later, isn't it? India imports more than 85% of its crude oil needs. For every $10 increase in crude oil prices, India's current account deficit widens, inflation pressure increases, and the rupee tends to weaken against the dollar. That's why oil-related global news matters directly to Indian markets. In India, oil marketing companies get nervous when crude rises. Aviation and paint companies face margin pressure. Upstream companies like ONGC benefit only if prices stay higher for longer. Short-term volatility affects sentiment, not fundamentals. India has minimal direct trade exposure to Venezuela. So this is not a structural risk but a headline-driven risk. The real variables to track are crude oil price trends, US dollar movement, and global inflation expectations. Geopolitical news creates volatility, not always opportunity. Markets reward those who understand data and impact, not those who react emotionally to headlines. If you want market clarity during global events, not panic trades, follow BN Research for data-driven insights and structured market analysis.